Hey, good morning. Just want to take you through some of the macro charts. It's easier to do it this way, just looking at the market from a bigger picture perspective. So this is the yearly chart. This is the highest time frame chart I have. I could actually go way back into the 70s on this, but for for screen resolution reasons, I can only show this much. It takes into consideration the 87 crash and all that. So you can see the bull and bear cycles, bullish cycle into the 87 crash, the 87 crash, and then the start of the 90s bull market up into the 2000 top, the 2000 um, tech crash, then the recovery into the 2007, 2008 housing bubble crash, then you had the crash, and then 2009 bull market recovery to where we are right now. So just putting all these cycles into perspective, you can see that we've had a massive move, and here we are. And the question now is this like some sort of continuation of this secular trend, or is the market putting in some sort of a secular high or top? So to answer that question, let's drop down a little further. And this takes into consideration yearly bars and quarterly bars. So you got the thick candles are the yearly bars, and in between are the quarterly bars spaced for time. And again, you can see this. This basically takes into consideration everything from the 2009 bottom, and then here we are, kind of putting in what could be construed as a top here. We'll see. Is it a continuation pattern or is it a topping pattern? That's the question. So let's drop down further. Let's go to quarterly bars. These are just quarterly bars, nothing in between, just a space for time. And again, you can see the full range of the bull market. 1, 2, 3, 4, 5 drives up. You can make the case that it's 3 or 4, whatever you want to call it, but certainly we're in the late stages of this. It's just a question of, are we going to top out here and roll over, or are we going to kind of consolidate, push a little higher, and finish this? It's tough to tell right now. We'll have to see how this plays out as we get into some of the lower macro time frame charts. So right now, the support's coming in around 2,700 for this corrective cycle that we're in right now. We can see this on the quarterly chart. There's some algorithmic support from this configuration here. There's also some more down to 2613. Let's look at the monthly now. The monthly starts to take a closer look at what we're dealing with here. One drive up, another drive up slightly higher, another drive up basically to the same level. You could make a strong case that we've got 3 drives up into a top here. This does look like a topping pattern as opposed to a continuation pattern, but we've seen this type of top formation here as well. 1, 2, this would have been 3, right? And then it continued. So we'll have to see how this plays out. I'm thinking 2,700 will probably hold. So again, this is looking toppy, but it may not be. We'll see. Let's go into the weekly. The weekly shows a close up of the monthly. 1, 2, 3 drives up. Typically, you get a pullback here. The levels on the weekly chart: 27.15. I've got like 27.12 on the daily. Close enough. Then you got 26.35. You've got 25.73. I mean, those are the levels. The only way that this turns into a bear market is if the market slices right through all of these levels. So you got to take out 27.15, 26.35, and then 25.73. You take all those levels and then forget it. It's lights out. We're going into a secular bear market, and it's game over, and something big is going on, and who knows what it is. But so we should probably hold here 27.15. I'll give the market the benefit of the doubt there. I'll be a buyer there. If that breaks, then you're going to go to the second level into the middle of these support levels, and you know um, go from there. But that's what I'm looking at here. We'll keep you posted as we go on, and hope that helps. Thank you.